Today's highlights. The US government is still shut down, which means related crypto legislation is stalled. Meanwhile, many whales on public blockchains are shorting Ethereum. Can you guess how Tom Lee will respond? VCs in the crypto winter are all saying times are tough. It's really not easy to survive in the crypto world. Meanwhile, a major US retail giant with over 650 stores has announced support for cryptocurrency payments. Both Bitcoin and Ethereum are accepted. Do you think they'll succeed? Washington is at it again, stirring things up. The Hill reports the US Senate is again trying to set cryptocurrency rules. But what happened? The bill was already dead before it landed. At the start of October, Democrats submitted a preliminary proposal for decentralized regulation. It was leaked ahead of time, which instantly ignited the fury of the entire crypto community. Both parties collapsed in an instant. Now, the Republicans and the Democrats who support cryptocurrencies are completely at odds and can't be reconciled. The US government shutdown is partly because of this. Congress is now busy dealing with the government shutdown. Who has time to look at the details of the crypto regulation bill? So, as for whether this bill will pass before the end of the year, I'm pessimistic. At the same time, the situation on the international stage is also explosive. In Europe, Ukraine is brewing a 12-point peace plan personally overseen and drafted by Trump. Zelensky has stated that Ukraine is ready to end the conflict, and Trump has responded by saying there's still a chance and an announcement could come within 2 days. As soon as this news broke, the market instantly became restless. Bitcoin surged to 114,000 in one go, but reality cooled off even faster than the excitement. The main reason is that the US government is still shut down, so capital is hesitant to enter the market, and profit takers took the opportunity to dump their holdings. It quickly fell back below 110,000, a classic case of the market getting hyped by news only to be hit by reality and see prices drop. So right now, the market is in a fierce tug of war between bulls and bears, and in the short term, Bitcoin is very likely to keep fluctuating. Stay calm, don't rush. The best strategy right now is to clear out your positions and watch the market. If there's a big drop, buy big. If there's a small drop, buy small. We also need to be wary of black swan events. For example, today, there was a public blockchain project that couldn't hold on any longer. The official team announced that due to the cold market, they are formally liquidating. You have to realize we're in a bull market. Even now, several public blockchains have collapsed. We must stay vigilant about black swan events. Be on guard always. The token for this project, KDA, has already dropped 60%. The community for this chain is filled with despair. Meanwhile, the crypto space is full of complaints. Bitcoin is still moving sideways, stuck between $108,000 and $110,000. According to Crypt's data, here's the Bitcoin inflow and outflow on exchanges. It's almost even. So this shows that the market sentiment is neutral. Everyone is just watching and waiting. In the past few months, Bitcoin was constantly being withdrawn with a significant outflow from exchanges, and the number of long-term holders was increasing. But recently, this trend has started to slow down. Simply put, the bulls haven't fully awakened, and the bears aren't completely mixed in either. The market is just grinding in place. In the short term, Bitcoin is very likely to continue consolidating and fluctuating, unless there is some new macro-level positive news or ETF funds flow back in to reignite the market. So what has caused this current mix of emotions? Monday's weekly review gave an explanation. The century-old American retailer, BIOS, is also entering the crypto space. They announced that they will officially accept cryptocurrency payments, supporting Bitcoin, Ethereum, and various stablecoins. From now on, customers can settle their clothing purchases on-chain in their stores. You should know, BIOS operates in 23 states across the US. It's an established retail company with over 650 stores and annual sales of $1.9 billion, a true giant in the retail industry. At the same time, the capital flow situation for Bitcoin is also quite interesting. Data shows that the funding rate has remained within a narrow positive range, which means the market as a whole is leaning optimistic. Although there have been some minor fluctuations recently due to geopolitical risks and macro policies, the overall trend hasn't changed. Everyone remains very confident in Bitcoin's medium to long-term prospects. However, this current state of excessive optimism toward Bitcoin can sometimes plant the seeds for hidden risks. For example, the crash on November 11th was a result of too many long positions piling up, and the market took a downward move to liquidate excessive leverage. As for the post-event explanations like tariff sell-offs or the Trump team profiting from it, those are just reasons people come up with after the fact. That's how the crypto world works. When there are too many people going long, there will inevitably be a downward correction. Conversely, when there are more bearish leverage positions, a unified upward move is also possible. So right now, all we need to do is pay attention to whether the funding rate turns negative. As long as it doesn't, the crypto market is just waiting for the right moment. Please give us a like and turn on the notification bell. Your likes and follows are a huge support for our daily updates. If you want to take it a step further, consider joining our membership. Our members get access to many wealth secrets. And from Monday to Friday, we recommend a small coin each day so you can experience the fun of trading. All right, let's look at the news. Recently, everyone has started watching the on-chain whales to predict whether the market will go short or long. Lately, on-chain analyst Yu Jing has set her sights on a true whale player. So how is she tracking them? This bold player withdrew $700 million worth of USDC from Binance in a single day, and yesterday pulled off a remarkable move. What did they do? First, this person transferred $610 million into RV, borrowed 66,000 ETH, and then immediately sent all the coins back to Binance. Anyone who knows the game can see what he's up to. He's shorting Ethereum. Based on the current market, the liquidation price for this short position is $260 million. What's the target price? Below $3,969. Although $290 million is just pocket change compared to Ethereum's overall market cap, everyone suspects that someone capable of shorting at this scale can't be a retail investor or a whale. It's probably an institution quietly dumping behind the scenes.
This mysterious whale's moves are textbook examples. First, they collateralize stablecoins, then unlock a large amount of Ethereum and dump it on the secondary market all at once. After the price drops, they buy back at a lower price to return the ETH. They profit from arbitrage. As Ethereum dropped to about $3,947, this position already has an unrealized profit of about $3 million. The precision is astonishing.
Which was somewhat expected. You know, we've seen a nice rise of 36% since the lows in April, and I believe today's drop is the biggest in over 6 months. But it's good to see the VIX spike. You know, at one point today, the VIX spiked 29%. That's the 51st largest spike ever in the VIX, so we're seeing a top 1% move, which I'd say reflects the market seeking safety.
This has followed as well. This successful operation may be seen as a bearish signal, triggering further sell-offs in the market. Currently, there are still over 2.4 million ETH pending withdrawal on-chain. If a portion of these funds exit simultaneously, it could intensify liquidity pressure in the market in the short term.
So who do you think is the most anxious about Ethereum being shorted and the market turning bearish? It's the Ethereum asset management companies. Can Tom Lee, the boss, still sit still? He has come out and made a statement, and he gave a reason that I think is just barely acceptable. He said that the current open interest is actually about the same as it was before the end of May, when Ethereum was still at $2,500. What does that mean? It means that with the same amount of capital, you're now buying Ethereum at nearly $4,000. Isn't this a mispricing signal to buy the dip? So he directly called out, don't panic, now is the time to increase your position. So on one hand, everyone is watching the whales to guide their own trading strategies. On the other hand, Ethereum's short-term leverage is very aggressive, and the short-term selling pressure is especially intense. But I want to make it clear to everyone that you might be able to guess right on short-term long and short positions, but no one can stop the bigger trend. Let me ask everyone a question. In the past year or two, have you heard about VC in the primary market? Mary. When it comes to investing, especially in the crypto space, when did this trend start? It began around the time of runes and inscriptions. At that point, VCs started losing their edge. Back then, some people even called us asking, hey, are there any fun projects in crypto lately? Even top VCs were directly asking about interesting crypto projects. So, from the time of inscriptions until now, meme VCs have already shown weakness. They're getting directly involved, engaging with users and communities themselves. So according to the data report from Galaxy Digital, the total industry financing in the second quarter of 2025 was $1.97 billion, which is a 59% drop compared to the previous quarter, and the number of deals also decreased by 15%. This marks the lowest level of VC investment in the crypto space in 4 years. There's an independent researcher named Takeshi, and what he said is even more sobering. He said after 4 years, VCs still haven't figured out how to make money in crypto. Previously, VCs were split into large, medium, and small players. Top-tier institutions like A16Z got in at the lowest prices, best valuations, and exited fastest. Mid and small-sized VCs just got a taste, while LPs of the smallest firms were basically big-time bag holders. So how should VCs play this game? In crypto, it's not that VCs don't work anymore, but rather, it's time to wake up, turn things around, and change their approach.
Research data shows that from January 1st, 2023 to December 31st, 2024, out of 1,181 crypto projects backed by venture capital, nearly 45% have already ceased operations, and 77% of the projects have monthly revenues of less than $1,000. Among VC firms, Polishing Capital has the highest failure rate in its investments. 44% of the projects they invested in were terminated, 76% generated no meaningful revenue, and the failure rate of their supported projects reached 72%. Top-tier venture capital firms like Delphi, Winters, Constance's, and Reason, as well as Horrid, are also included. They too have suffered heavy losses, with more than two-thirds of their investment projects declared failures.
In traditional finance, VC status is determined by influence and the amount of capital, but in the crypto space, the VC ecosystem model is likely to undergo some changes. Do you all still remember our secret channel? The secret channel was a valuable experiment. When we saw this new trend emerging, it wasn't that VCs were no longer viable, but rather that the form of VC needed to change. Our secret channel is a community-based VC. It's BTV's own investment tool, governed in a completely decentralized way. Every single dollar is invested by users, and decisions about which projects to invest in and how much to invest are also made by user voting. So far, the secret channel has raised just under $4 million and has already invested in more than 40 projects. Of course, investing in the primary market means facing long investment cycles, uncertain returns, and even the risk of losing your principal entirely. But if you manage to pick one or two winners, the returns can be very impressive. As for whether the VC should continue and whether it can become a model for the crypto world, we are willing to make a meaningful attempt. As long as it benefits Web3, we hope to be at the forefront, at the very least to be a loud voice for it. Coinbase spent $375 million to acquire its own project. Do you think this is an ecosystem strategy or just capital playing games with itself? Countries everywhere are scrambling for sovereignty. AI is stirring up the stablecoin space. B is putting out fires, and the payment landscape is about to change dramatically. In the crypto space, there's another case study involving early-stage projects and VCs. Aside from fully DAO-governed models like MeDAO, there's another example called Kobe. Kobe is a project that was only established about half a year ago, if I remember correctly. They've already invested over $50 million, and they've participated in investments in some really good projects. Their fundraising has exceeded $51 million. Of course, behind them is their big backer, Coinbase. Coinbase itself is a closed loop. Basically, they set up their own foundation, invest in their own projects, and even create their own projects. It's a capital closed loop. I really hope that one day I can lead BTV to create a capital closed loop as well. Even if we can't reach $50 million, wouldn't $5 million be good enough?
In May of this year, Echo launched an innovative product called Sona. This software allows project teams to choose a blockchain according to their own needs, such as Hyperliquid, Base, Solana, and Cardinal, which offer self-custody and public token sales. Kirby stated on the X platform that after being acquired by Coinbase, Echo will continue to operate as an independent brand. Meanwhile, Solar will be integrated into the Coinbase ecosystem.
What we're doing is trying to take a lot of these internal services that we've had to build for our own products, and we're making those APIs available to external customers through Coinbase Cloud.
On the surface, this appears to be an integration at the tool level. But looking deeper, Coinbase's ambition is to reconstruct the on-chain fundraising pathway, enabling direct matching between capital and projects on the blockchain. The first phase will use Sonia to facilitate crypto token sales. In the future, this will extend to tokenized securities, real estate, and artworks, real-world assets, with the goal of creating an on-chain capital market where anything can be financed.
So, what about Sonia? There's no doubt that this project is Coinbase's own brainchild, but even though Coinbase acquired it, they didn't restrict it to only launching on Base chain. You can choose any chain you want, and they'll support it. By the way, just as a side note, ever since we moved our main battleground to YouTube, there are a lot of differences. For example, on YouTube, you can link to your official website, your Twitter, your WeChat, whatever you want. You can direct traffic anywhere, and it's all open. But if you look at the domestic internet, you can't open WeChat, Taobao can't open Taobao, Douyin doesn't support Douyin, and JD.com is isolated from the others. Every big internet company keeps its doors closed, afraid that someone else will take advantage. So if you really want to understand how to play the internet game, start by having the big companies open their doors. Broaden your perspective first. The world of the internet would truly become vast. On the 29th of this month, our channel will have been running for 6 years. Even though I've never passed math since I was a kid and can't really do calculations, when it comes to spotting trends, I think everyone can still trust the perspective of an old media professional. Since 2022, I've actually been keeping a close eye on the payments sector. Why? Because in 2024, McKinsey released a report stating that the global payments or commercial trade sector is worth 20 trillion US dollars, just the payments industry alone. It generated $2.5 trillion in profit. This $2.5 trillion comes from 3.6 trillion small transactions, and the average annual return rate, believe it or not, is between 80% and 120%. To put it plainly, the payments industry is truly a legitimate money printing machine. And in Web3, whoever can seize this vast blue ocean of payments will be able to get ahead of the competition.
And now we're getting legislation. So, it's a huge tailwind for the industry, not just for Galaxy, but for the whole industry. And we plan on taking advantage of it.
Global payments are slowing, with payment revenues in 2024 up just 4%, much lower than 12% in 2023. This is mainly due to peak interest rates, a weaker economy, and more use of low-profit methods like A2A. Performance differs by region. Latin America leads with 11% growth, while Europe, Central Africa, and North America grew by 8% and 5% respectively. Asia Pacific, on the other hand, declined by 1%. The payment structure continues to evolve, with global cash usage dropping from 50% to 46%. North America is dominated by consumer payments, Asia Pacific focuses on the commercial side, and Europe, Central Africa have diverse structures. Latin America relies on credit cards.
According to McKinsey's forecast, by 2029, the payment industry could reach a scale of 3 trillion US dollars. So this pie is really big. Otherwise, every exchange wouldn't be launching its own payment card, right? So in my view, payment cards are meant to solve payment problems. They have to be simple enough, easy enough to use, and widely supported across the entire industry. Many payment cards don't allow users from mainland China to register, or from the US, or from Europe. There are a lot of usage restrictions, and I have to mention the MiPay system again. After trying all the payment cards from Dubai, Hong Kong, Singapore, and Europe, I can say this is the simplest, safest, and most efficient use case I've found. Of course, when it comes to the payment track for cryptocurrencies like USDT, the challenge arises when you need to connect with the fiat currency system. You could say that policies are changing every day, but MiPay is showing real commitment. After just obtaining its European license, MiPay will have even more compliant channels to break through, one by one. What I appreciate about MiPay is that it knows exactly what it wants to do. It just wants to make money from transaction fees. So, MiPay doesn't hold on to your assets, nor does it offer any staking returns. It's just straightforward and simple. You earn exactly as much as you need. In MiPay first, you can convert it into RMB, USD, or any other national fiat currency. Second, you can transfer it to a MasterCard and spend it globally using a virtual card. Once you have this tool, who would still need a physical USDT card? What are your UnionPay card and your Math card for then? There are countless good payment methods. Choosing the one that suits you is the right choice.
OpenAI is about to make big moves again. This time it's not a new model, but a browser. It's called ChatGPT Atlas. It seems that AI isn't just going to answer questions anymore, but will actually surf the web itself. According to CME's FedWatch data, there's a 96.7% probability of a 25 basis point rate cut in October. Only 3.3% think there won't be a rate cut, which makes it pretty clear the market has almost fully bet on it. With Powell about to inject liquidity, spot gold plummeted by 5% today, dropping to $4,136.79 per ounce. Even during New York trading hours, it couldn't hold up and broke through the $4,150 mark, falling 4.81% in a single day. This plunge in gold prices has left the bulls completely disheartened. Meanwhile, in the crypto world, major capital has entered again. According to Blockworks, a lead investment of $25,500,000 was made in a strategic financing round. IDG Capital has also jumped on board. This move is clearly aimed at betting on the new wave of Web3 social platforms. USDT has broken another record. The CEO of Tensor officially announced that the number of USDT users worldwide has surpassed 500 million, which means that 1 out of every 16 people on Earth is using USDT, solidifying its status as the king of stablecoins. Its dominance is now fully established.
There's no motivational talk today. Today, I want to answer the question I get asked the most. Many people ask, Michael, can I be like you and quit my job completely to go all in on Web3 and become a true Web3 person? I think this question needs to be answered carefully because it concerns your career choices. I have 2 criteria. The first is this: calculate your expenses. If you spend 10,000 yuan a month and you have 120,000 yuan in savings, that means you can go a year without working. At this point, you shouldn't quit your job. You can keep working, slack off a bit, and research Web3 on the side. Working well is to ensure your basic survival and treat your salary as a safety net. Out of that 120,000, you can take out 8% or 9% to invest in Bitcoin. This is a sure win track, and it's worth putting in money you can't afford to lose. The second criterion, if you have enough liquid assets to last you 10 years, that is, you could survive for 10 years without working, then go ahead and quit your job. Write your boss a note telling them to go to hell and leave a message for your colleagues. I never liked you either. Then go all in on Web3, settle down and study hard. Read all the white papers, get to know every sector, pick one you like and dive deep into it. Seriously, keep up with every piece of information, starting by subscribing to our channel. Stay on top of all the trends in Web3, chat with the big names, and interact with all the valuable information you find on Twitter. You don't need half a year. If you're smart enough, you don't even need a college degree. You can make it in Web3. At the very least, you'll leave your mark and achieve the results you want. But the key is, don't treat this like a casino or think you must get rich in 3 months or break even in a day. If that's your mindset, you're in the wrong place. Web3 is close to money, but there are also pitfalls in Web3. If you want to get into Web3, you're welcome, but you need to ask yourself, what is your real motivation and reason for entering? This is very important. If you understand, feel free to give us a like. Every day, we help everyone by compiling the 5 most important news stories in the crypto world. We hope this summary can help you as you enter the space, and we also hope you'll consider joining our membership, where you'll get access to all our member benefits. We want to lead everyone in this bull market to grow together and gradually become wealthier so that we can accumulate more and more Bitcoin. May Satoshi bless us all. See you tomorrow.